Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, which is going to be a really quick one, I'm going to show you the trade that happened on GBPUSD based on high probability supply and demand zone. I want to show you exactly if you're trading manually, how you can have a sniper entry with a 100% accurate risk to reward ratio. So as you know guys, I always trade around New York session, like in a New York session, and I'm a 5-minute time frame on GBPUSD. So the first thing I realized was this crazy bullish trend that happened. I'm going to remove all these lines here because they never got tapped into. So we have this one right here, and if I go to 15-minute time frame, I can actually have a clearer image that what exactly happened. As you can see, there are multiple breakout structures towards upside. So this one and this one, and yeah, because of this one, so it actually tried to go up and break all these important supply zones or resistance levels, because they're all major resistance levels, to just fill in the gap right here. See, there's a huge gap that you can literally see from here. I don't even have to zoom in. So the gaps want to fill in just because it's a huge one, and it has to come back anyways. So I always say that on my videos, guys. Whenever I see a gap, I know the price has to come back and fill in the gap. But when, we don't know. Maybe next year, maybe next day, or next month. So in this case, it took us a long time. So when we had this bearish momentum from like May 11th all the way to May 17th, in 6 days, it came up to fill in the gap right here. So we know that we definitely have a bullish trend just because of that reason, and I can actually identify any high probability supply and demand zones around this area. So I know that we also have a huge gap from here to here, because it just kept going up. The buyers got into the market, but they put the stop loss here, and we know that there's a huge gap. But I'm going to see, we have a high probability demand zone on a 15-minute time frame. We have another high probability demand zone in 15-minute time frame. So it means that we have a gap, and we have, yeah, so far so good. We have two right here. If I switch it to 5-minute time frame, I can find another high probability demand zone right here, because this is the last bearish candle. After that, there's a huge spike towards upside. Next candle never tapped into this zone. That's why it makes it a high probability demand zone. If you don't know the definition of them right now, guys, I have a video that I fully explain what they are and how you can use them. It's going to be super helpful for you, I can guarantee you. And I'm going to put a card above this video, so the only thing you need to do is just to check out this video and see how it exactly works. Okay, so right now the only thing I could do is to wait for the price to tap any high probability supply and demand zone. Since we don't have anything right here, that one is the only target I have. That is the only target I have. And as I said, it was 8:55. We were still waiting, and the price finally tapped into our level. So in this case, I personally usually put a buy stop here, and I put my stop loss below the candle. Sometimes, I put it below the zone as well, but the risk to reward ratio is going to be less than that. So let's say I put it below the zone, which is exactly what you need to do, but sometimes the zone is too wide and it's not worth the risk to reward ratio. So that's why I just put it below the candle. And right after that, this candle triggered my buy stop. So right now I'm in a position. Again, the stop loss could be here or below the candle. And two candles after that, or one candle after that, literally smashed my TP, and it was a profitable day. But it's not only that, because this is a profitable trade, and at the same time, it created this high probability demand zone right here. Look at this. We have another high probability demand zone, huge spike towards upside. Next candle never tapped into this zone, so that's why there's a gap between this candle and this zone right here. Okay, so we know that this is another high probability. So you just wait. There's no high probability supply zone except one right here, so I can see that because it's not tapped in yet. It says it's not filled in, I would say, because there's still a little bit of gap between this candle that dropped and the next candle after that. So this is a high probability supply zone that even this candle never tapped it. And this one, look at this. This candle is beautiful. You can take another trade, put your buy stop here, your stop loss here, and your TP right here. See, it easily tapped your TP. So right now, since you know that it already filled in the high probability demand zone, you take your one-to-one trade, and then it tapped into your high probability supply zone. So in this case, you can do the opposite. Put your sell stop here, your a stop loss right here and then your TP right here. So let's say we want to take a one-to-one trade, but let's see if it happens or not. Okay, so even this one is a profitable one, guys. See, I'm not using any indicator. It's only based on high probability supply and demand zones, and 80% of the times it's accurate and profitable. You just need to identify the gaps properly, and you know that since it's the market is in consolidation, there's a high chance that both your high probability supply zones and demand zones are going to work out properly, and you can, you know, by putting your stop loss here, you can easily take a one-to-one trade. But there's a question here, that how can you be fast enough to take these trades with a proper risk management? That's a problem that a lot of traders are facing, guys. I don't know, everybody use a different strategy for that. Some people use a calculator, some people use different websites, but it's going to take a time. It's going to take a long time if you want to do it manually, especially you know, I used to use a website. You go there and then you have your currency that you put in, the stop loss amount, like the peep. How many pips is it? You just say 20 and then GBP and then your TP. Like, it's 2 minutes, like a minute, but you want to do it in less than a second. How can you do that? By using Profit Master Incubator. That this is our brand new EA, and what it does is that, let's say I'm in GBPUSD right now and I want to take a buy trade right here or a sell trade. So all I'm gonna do is to go to this input section, and then I'm gonna tell him or tell it that how much exactly I want to risk, and it's gonna quickly calculate the risk to reward ratio for me. It doesn't matter where I move my stop loss to. So let's say that the percentage of risk relative to equity, I want to risk 1.5% in this trade. So I activate my automatic lot, which is activated right now. The percentage of risk relative to equity is 1.5%, and this one we don't deal with it because this one is activated. So we just mentioned how much percentage we want to risk, and then okay. So you see that it's going to reset for me, and let's say that I have my high probability demand zone right here, and I want to put a buy limit because it's actually lower than the current price, and I just need to click buy, and this white line is my entry point, and I just put it here. And this is my stop loss. Look at this, guys, $20. So $20 on my $1,000 account is 1.5%, and it doesn't matter where I put my stop loss, it's going to be fixed, and the only thing is changing is my lot size based on my percentage, that how much I'm willing to risk. At the same time, my TP is different, so $142, now it's $80. Now if I keep changing my stop loss, you see that the stop loss is the same, but the TP amount is different, and this is exactly what happened. So I could have put my stop loss right here, my TP right here, and you see that the rate is 314. So it means that I'm over 1-to-1 risk to reward ratio. If it's less than 1-to-1, it's going to give you an error, let's say like this, and then you press OK. You see that the risk to reward ratio is not appropriate. But if I widen my TP, and if I press OK, you see that it's going to open the trades for me, which is absolutely crazy. And my buy limit is sitting at 0.28 lot size without doing anything. I just mentioned how much percentage I want to risk, and then the Profit Master Incubator did everything for me, completely hands-free. Just need to change the parameters, and that's it. And see, my stop loss is here, and my buy limit is here, and you can do the same thing with sell limit, sell a stop, and buy a stop, and then you can take a sniper entry. So let's say that the price is right here, and you want to put your sell a stop here. You put your sell a stop here, you put your stop loss here and your TP here, and it tells you exactly how much you're risking. So if you want to grab your license, guys, I'm going to leave a link below in the description, and you can contact us via WhatsApp. One of our team members are going to send you a demo file, which you can try it on a demo account first to see if you like it or not, and then after that, if you like it, you can go for the real account. So contact us on WhatsApp. Well, I'm going to leave our number here. You can also find it on our website, smartincubator.com, and then we'll send you the demo file to see how it's going with you. So thanks for watching this video, guys. If you have any question, drop your comment here. I'll personally reach out to you.